morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Avan Dabash, Nikunj Dalmia on the show. And what happened last week? Well, the Nifty managed a fall of nearly about 3%. Mid-caps, well, they did fall a lot less by about almost 2% or so. All major NSE sector indexes closed lower. Metals, realty, PSU banks, they were the most hard hit. FMCG, thanks to the movement in ITC, managed to stay resilient, as was the case with some of the healthcare names as well. But yes, we did kickstart a brand new series as well. The Nifty Premium is now standing at about 100 points for the Nifty Bank at 245 odd points. And soon we're going to be in the last month of the first quarter of this calendar year. And almost closing the financial year.
Yeah, and if you look at what markets have done in this entire financial year, returns have just not been there.
Yeah.
We'll talk about it, but right now you have to really put the things into context in terms of what has transpired for market action for the week gone by. I think it's a global plus a local shift, not a change, but a shift in the narrative. At the beginning of the year, it had appeared that globally and locally, the print of inflation, the worst print of the inflation was behind us. But now that thought is getting challenged. When a very basic thought that where inflation and interest rates are headed, if that gets challenged, that will in a sense lead to a sharp adjustment in the market. So that is the reason why globally markets are correcting after what we've got in terms of inflation print, the central bank commentary, comments from central bankers who've come to G20. All that put together is leading to nervousness in the market. FIs, they have been net sellers, they were buyers for very few days, but in general that flow in a sense continues. The Nifty has failed to scale up. We are going back to the key levels from where Nifty historically has found support. Will it get tested this time? We'll talk about it. But in general, the mood, I guess, is clearly telling you that if you're trading, it's a bad. Trading has not been a very futile exercise. The market momentum is lacking. If at all, there is now nervousness in the global market, and the excitement to really even participate in the market, I think, is drying. More than the absolute collateral damage, it is just the desire to trade or desire to invest is just missing. Volumes have dried up. Nobody wants to look at the market. It's just a market which is getting a royal ignore.
Fatigued. Although, must warn you that March has been, famous for being one very volatile month as we kickstart a brand new one, almost. In 2018, the Nifty fell about 3%. 2019, that's the pre-COVID year, we managed to gain 7%. 2020, of course, was the start of COVID. You had a big crash, so 23% is the kind of fall that we had. 2021, a more somber one with just a negligible 1% move on the index, and then 2022, it was a 4% gain. So let's see what the current series actually throws up at us.
The difference, I guess, Aisha, is that we saw sell-off in March 2022 largely because of Ukraine and largely because of war. 2020, you had the COVID hit, and 2021 was just another normal year. So March, in a sense, has been a very tricky one to call, and this time also, I think it will not be an easy one to call. If globally inflation peaks out, money will come back. If globally China starts decelerating, money will come back. So I guess the month of March would be a very tricky one to call, consider the backdrop and considering the kind of setup we are in. This is a market which surely is testing patience for investors. This is a market which is making everybody wonder that is it a good time to just stay invested in equities. So if you have to divide the market in the short term, I guess in the month of March, as of now it appears that it may be a very difficult month. It may not be an easy month to call looking at the global setup. I've been asked this question again and again, folks who meet me and folks who ask me on social media that SIP ka kya kare? Arey bhai, SIP you bought for 10 years. It's only been 1 year of lull return. So this is the time you have to really, follow that discipline.
Yeah.
So if you are buying in for 5 years plus, I think you should not panic. If you have a time view of 1 month to 3 months, then this is a market you do not want to trade. I guess the market trend will only come if you get a local trigger which is positive or globally something goes wrong. Unfortunately, what is happening is that globally things are moving in the wrong direction rather than the right direction on the inflation front, which is leading to vacuum, which is leading to volatility, and which is forcing the bulls to really go behind the firing line.
Yeah, and speaking of the global markets, a quick roundup. You had the major averages which posted their biggest weekly losses. The Treasury yields as well have seen quite a jump on the back of the latest reading in the personal consumption expenditure in the US. Asian markets, they seem to be tracking what the US is up to and for the most part are in the red. That's the SGX Nifty as well, indicating a pretty soft start for us. And now we'll be watching out for developments with the Japanese governor speaking and the unemployment numbers from Japan. And mind you, you've got the dollar index as well hovering around 105 mark. That was a 7-week peak. But moving right on then, let's talk about the Adani group of stocks back home because the acute volatility only continues. Those are the charts of the Adani group stocks from their 52-week lows, how much they've recovered. So you have seen a substantial recovery for the most part in the likes of Adani Ports, Adani Power, NDTV, etc., and a close to 40% Nikunj recovery from the 52-week lows. So volatility is pretty imminent in this cluster of stocks.
No, it's coming out, so Adani group of stocks and the narrative now seems to be popping right back up, and especially after the collateral damage what we saw in some of these stocks, let's say just in and around the expiry. The fact that Adani group of stocks have not stabilized per se is not making markets nearly nervous, but markets are again discussing some of these stocks. So the two stocks which in a sense which are occupying lion's share of narrative, enjoying lion's share of narrative, I would say one is Ambuja Cement and second is Adani Ports. So barring Ambuja Cement and Ambuja Cements and Adani Ports, from an institutional standpoint and from again an HNI standpoint, nobody is really focusing too much on these stocks. Adani Power or Adani Wilmar or even for that matter ACC, they are not part of the narrative. So why are we talking about them? Well, we are talking about them again because on Thursday and Friday you did see some kind of selling in them. The impact of that I think is visible in some of the banks and some of the LIC stocks. So yeah, this is something which may not occupy the center stage, but this really is something which markets again would be curious now that the series has ended, how some of these stocks would move.
Tell us all about your Zomato interview.
Yep, what an interview. Yeah. And what an experience to go into Zomato. And it's only when you, it was my first visit to the Zomato head office and it was a completely different experience per se. To meet Dipinder Goyal and understand that how, that Zomato is just not a food delivery business. It's a company which in a sense is here to stay. It's a company which is growing. It's a company which has got lot of levers attached to it. There definitely seems to be a big change. Aisha, if you frankly ask me in terms of how some of the consumer tech and fintech promoters are looking at the markets. All of them are now committed to create shareholder value, walk on the path of profitability. They're getting conscious about the capital allocations they want to do, and they do not want to burn the cash now. So that I think for me is the subtle realization, at least in this Delhi trip when I met a couple of startup promoters.
And there you are, crushing him at push-ups, is it? Or is it the other way? We'll have to wait and watch.
Yes.
Yes, indeed. And that's the big interview, CEO at Work, coming up. As Nikunj highlighted, lots of big headlines as well that we got from Dipinder Goyal. In fact, let's just take a look as to what Dipinder Goyal had to say when it came to their plans of aggressively working on turning profitable, being very categorical, saying that they do not like to burn cash.
We're talking about push-ups or we're talking about squats or both?
Anything.
Push-ups में थोड़ा try करते हैं. Push-ups चलिए दोनों करते हैं. चलो. जोर लगा के हलिया. जितनी उम्र उतनी पुशअप. Batch 1, views. You were amongst one of the first consumer tech company, the new tech internet company, which used the word path to profitability. It was like saying that when you were in a private arena, the rules were different. Now in the public arena, the rules are different. Has the transition from the private market to the public market forced you to start thinking about cash flows, profitability?
I would say no, because I think for the first 5-7 years of our life, we were actually profitable. In 2018, we also hit a profit. So I think whenever we have burnt money, it's mainly because the market has forced us to do it. And competition has forced us to do it, right? So there was a point in time where the competition raised $1 billion, and we had about $100 million in the bank, right? We still had to fight that much money with a lot less cash. So we've been efficient overall, I think. I mean, and profitability is also, I mean, we try to get there as soon as possible. I don't like to burn cash.
So if the stock would have been at 200 right now, your path to profitability, your commitment to what you've shared with the market would have not changed.
Would have been the same, at least for the business that the core of the business that we are in, right? So Blinkit is something new, and I think of the entire business in terms of sum of parts, right? So I don't think of it as one large P&L. So Zomato would have made money; it would have been on the same path. Blinkit would have been on the same path, right? So maybe we would have done something else, like maybe a third bet, right? But I don't think that us taking a third bet or not taking a third bet has anything to do with the market, right? It is to do with whether we actually believe that some bet is worth taking or not.
Okay, that's a whole lot of interesting stuff coming up on the show this Monday morning. But let's find out what's the global opinion. Anisha has been gathering that all through the weekend. She joins in with a summary. Anisha?
Well, I'll start with the words of wisdom coming in from Warren Buffett in his annual shareholder letter. And as always, sage advice coming in there. I won't do justice in just mentioning a few points. I would recommend everyone to read that. But just in terms of the key highlights, he talks about the importance of having a great partner. At his witty self, he says that it's never a phone call that where Charlie Munger does not educate him further and he doesn't learn something new. So that's the word coming in. He, in the humble ways, as always, calls his capital allocation so-so and the performance of the fund satisfactory. And he goes on to say that disappointments are inevitable. They have made big mistakes, however, but just by loads of luck, they've managed to do so well. In fact, he said that the best decision so far for him has been the fact that he's been backing the American economy, and that's always worked out for him. And he doesn't anticipate a time in the future wherein betting on America would not work well for the investors as well. He clearly says that he as well as Munger are business pickers and not really stock pickers, and as their favorite holding period goes, which is forever, they say there is no finishing line at Berkshire Hathaway. So very interesting annual letter coming in yet again. I would recommend a good read coming in on that one. But shifting focus to what the Fed member had to say, and this one is coming in from Mester. She was talking about the hotter than expected personal consumption expenditure data which is out. Now she said that definitely shows a sign of indication that the impulse of inflation and price pressures is still with us, and it's going to take a lot more effort on the part of the Fed to get the inflation on that sustainable downward path to 2%. So maybe a bit of hawkish stance coming in there. Mohammad Al-Arian, he also is talking about what is happening in the fixed income market. They are reversing gains since the start of the year in a reality check over the path of interest rates. A key question, however, that he raises for investors is that how will new inflows into bonds respond given the economic and price volatility that we are likely to persist for now.
So that's the take coming in from Mohammad Elarian. And just wanted to wrap up by the words coming in from Christine Lagarde. This is the interview that the Economic Times paper actually got, and she mentions that more tightening will be needed if there is if fiscal cooperation is absent, and will do more rate hikes if necessary to bring the inflation down to 2%. In fact, talking about India, she says, when I look at the Indian economic data, it is a country that has done much better than expected around the world. If you look at the GDP figures or the unemployment data, which has increased but not in dramatic ways, and I would say that there has been continued progress coming in on India. So another thumbs up coming in for the country.
Okay, Anisha, thanks very much. Certainly some very interesting key takeaways that we got from that Berkshire Hathaway annual letter, and also talking about what the other global commentary is. Let's connect then with Kunal Bothra to understand levels on the index, given the fact, Kunal, that we fell about 2.7% last week, and it was a lot of those high beta stocks that came under pressure. What's the charts indicating for the day?
So, the good part first is that the markets have stopped that intense selling pressure. So, we are not going to a period where there is a 150 point, 200 point negative day on the index, as well as the volatility throughout the day or during the day is not as steep as well as sharp. So, earlier we had seen more than 1.5 to 2% of an intraday moves on the indices, and a net cut of maybe 1.5% on an average over the last 4-5 days of the sell off. That has now abated clearly. So, we are holding on to that 17,500 mark now. Maybe plus or minus 1,500 points, that's absolutely fine. But I think till the time we hold on to those 17,500 levels broadly, the market texture would look a lot more positive than what is earlier. The other part for the market is that the bid-up in terms of the futures has been quite strong. Now that could probably be an indication that maybe there could be shorts which were carried over for the March series. But then we'll probably wait out for maybe another couple of days. But if there is any kind of a bounce back, and if you see a round of short covering, that also would probably indicate that the markets may get into any kind of a reversal. And the third and the most interesting part is that the global markets as well are going through a phase of stability. So there are intraday bouts of volatility, but even the global markets are getting into a phase of a bounce. So all in all, I would believe that 17,500 mark, if we broadly hold on to the support levels, the market can see a reasonable bounce from current zone.
Okay. Kunal, in the week gone by, while most sectors got clobbered down, be it metals, be it PSU banks, there was some amount of resilience when it came to healthcare names, largely hospitals and some of the select pharma names, and FMCG led by ITC. What trading stocks would you recommend this morning?
So add to that maybe an IT stocks, and I think a smaller sector which is also emerging quite strong is the gas stocks. So because you've seen, I think on Friday you saw ONGC as well as GAIL, starting to shoot up higher. Earlier you had Gujarat Gas, IGL also looking quite strong. So I think this is the other pocket which I would believe looks very attractive. Now the two names which I would particularly be bullish on from the gas as well as from the entire energy space, one would be Gujarat Gas. That's a stock which I would recommend as the first buy. Expecting the stock to go back towards the previous swing breakout, 538 to 540 is what I would eye as a target for Gujarat Gas, stop loss at 490. And the second would be ONGC, a stock which I've been bullish on, specifically over the last 1 week. Big breakout, 4 rupees odd dividend for ONGC, all of that priced in. Expecting the targets to remain to the same at 170 for ONGC, stop loss at 150.
All right, watch out for those recommendations. Let's also connect with Manoj Muralidharan, who's joining in on the technicals. And Manoj, going by the kind of past history that we've had for the month of March, last year we gained about 4%, and in the year 2020, of course, that COVID year, we shaved off about 23%. What's the expectation for this month, and what's your outlook on individual trades?
Well, good morning. There are a couple of important things that I guess we need to look into. First of all, the previous month, obviously, it's because of the event which is your union budget. You have a higher hedge ratio from the FI side. Now, hedge ratio is nothing but simply the amount of Nifty future short that you carry for the entire stock positions or the market wide position that you have in terms of stock futures for the current month. But this month, even in the March series, we have seen when we started the new contract, we have seen this hedge ratio is up to almost 10.1. Usually, we see it close to around 6 to 8%. So the view here is there is concern in the market, and the most important thing is there is shorting in the Nifty future. So that is a healthy sign at least the market is not complacent about getting bounced and there is no hedge position in place. No, so there is certainly hedge in place. So we believe that this question of 300 to 400 odd points in terms of correction, if that happens for the index, that might certainly be a good level. So we believe 17,200 to 300 might be the base for this month of March, and there is a possibility of almost 17,850. The reason I am mentioning 850 is because this entire 1 crore, almost 1.06 crores of positioning that is there in the Nifty March futures, that has a weighted average price of closer to the same value of 17,850, and it is the banks and the bank Nifty which are not really helping, or maybe we are seeing more selling from that side. So the view here is it's a good 700 odd points range that we are expecting for the March series, with 17,200 to 300 as a base maybe, and around 17,850 as the top.
Right. Okay. And Manoj, what stocks would you recommend to our viewers?
Well, stock specific, there are a couple of them, at least in the Nifty 50 itself, where we have seen good buying, and I believe it might be more from the stronger hands or the institutions, and because they usually choose arbitrage as a simple way. Arbitrage is nothing but when you create a cash position by taking delivery in the stock, and you see a relevant derivative shorting which goes on rolling every month. So to top the list, I guess Tata Motors at obviously 385 to 388 is where the arbitrage started. But even now, we believe that the levels of 4 to 20 to 25 is a good level to go long. The stop loss should be closer to 415, 417, and we're expecting the stock to ideally do 436 to 440 for this month. So that should be a good buy. Now, from the banking pack, we believe. If you remember the event for HDFC and HDFC Limited, it came in April, and then we saw the unwinding happening in December. So HDFC Bank has not really crossed the 1680 level, and we have been seeing some positioning shift from HDFC Bank, and there is shorting happening in the derivative side as well. So if you get HDFC Bank futures closer to 1618 to 1620, that's a good level to short. A stop loss of 15 will be 1635 for a target of 1580 on the stock is very much seems prudent at this point.
All right, there you have it. Those are the top trades to watch out for in today's trading session. Time for a very short break. Be right back with more market talk.
Okay, while the SGX Nifty is indicating a muted start, we're coming out of a rough week. It started a brand new series as well, with the Nifty falling 2.7% and the mid-cap index down 2%. But let's talk about all the stocks and sectors which are going to be in focus. And according to the Economic Times, Bajaj Auto is expected to take a steep production cut, probably up to 25% for both motorcycles as well as three-wheelers. Let me take it across to Sharath and get in more details here. Sharath?
Well, yes, Bajaj Auto is expected to actually have a production cuts coming in, and this is coming in due to uncertainties in the exports. Now, do remember the exports have been under pressure for the last 6 months itself, and they're down almost 34% on a year-on-year basis. Now, it's expected that the capacity utilization for the month of March may also come down below the 50% mark. But now let's look at the export-based plans and what actual movements will happen, and of course a 25% cut in capacity is expected to kick in. And the important thing is about the Nigerian country, and over here the uncertainties are there overall in Nigeria, and do remember almost 1/4 of total exports come from Nigeria as well. Now let's look at the numbers, what the production numbers would be expected for the month of March itself. Is the likely production is expected to go between 2.5 lakh to 2.7 lakh units. And if you see the average monthly numbers coming in for the 9 months FY23, that number itself is more than 3 lakhs. So that is something which is important to ponder upon. But what happens next for the stock? And over here, management has given a commentary of almost 3 to 4 months of softness in demand in their key international markets, and also it's estimated that the overall export shipments are actually expected to fall between 20 to 25% in FY23. Now looking at the broker stake itself, over here we look, Jefferies has given a maintained buy rating with a target price of 4,300 rupees per share, and Citi has also given a maintained sell, but the target has been increased to 3,500 rupees per share because Q3 numbers were good, especially on the strong EBITDA numbers. In the next 2 days itself, we'll also be having our monthly auto sales number for the month of February.
Sharath, thanks very much for giving us those details. That's the latest coming in according to the Economic Times reports on Bajaj Auto. But let's pepper the show with lots of fundamental stock ideas, and here are what Hemang Jani is betting on.
cap space, there are names like APL Apollo Tubes, Poonawalla FinCorp, Metro Brands, Lemon Tree Hotel. These are the names where we've seen fairly resilient numbers, and where our outlook in terms of earnings for this year is very strong. So these are the names where we would be buyers at this point, or if there is a small correction, let's say 5-7% over the next few days, that will make them even more attractive. And from the large cap space, I think auto remains to be on the top of the list, and Mahindra, Samvardhan, Motherson, Maruti, these are the names that we would be positive on. And of course, IT is something that we've seen some stability coming through. And we think that over the next few days, so names like TCS, Infosys, HCL Tech, these are the large cap IT names where we have a slightly more comfort because of the lower valuations.
All right, moving right on then, the other big news that dominated headlines on the weekend on Deal Street is that according to reports, Sunil Mittal is actually eyeing stake in Paytm, and there are also rumors that Jack Ma-backed Ant Group plans to pair its stake. Let's understand a little bit more then. We've got Samit who joins in with all the details. Samit, what would really be the deal implications for Paytm and Bharti Airtel?
Well, there were multiple news reports, firstly, which said that Sunil Mittal is looking to buy stake in Paytm, apart from the fact that he's also looking to merge the Airtel's Payments Bank business with Paytm's Payment Bank. Now, some details about the Airtel Payment Bank business. Now, Bharti Airtel, which is the listed entity, owns directly close to 73.4% stake in Airtel's Payments Bank business, while Bharti Enterprises, which is the parent company of Bharti Airtel, and the enterprise and the unit which is owned jointly by Sunil Mittal and Singapore's Singtel, owns close to 26.6% stake in Airtel Payments Bank. So this is what this is the business unit which Sunil Mittal is looking to merge with Paytm's Payment Bank business, and is also looking to separately buy stake in Paytm from the large investors like Antma and Financials and SoftBank. However, when you compare Airtel Payments Bank business with that of Paytm, it's a very small business, because if you see the monthly transacting user base of Airtel Payments is nearly half of what Paytm's monthly transacting user base is. The GMV, that is the gross merchandise value, is nearly 1/7 that of Paytm. However, Airtel's Payment Bank business is profitable, and in the third quarter of FY23, they reported a profit of close to 3.5 crore as against Paytm's loss of close to 392 crore rupees. But what could be the value of this Airtel Payments Bank business? Now, currently the analysts who are tracking Bharti Airtel do not assign any significant value to this business in the SOTP calculation, but according to the last transaction that happened in Airtel's Payment Bank, that is in August 2021, where Kotak Mahindra Bank sold close to 8.6% stake, the business is valued at close to 3,400 crore rupees. However, what this deal could mean for Bharti Airtel as a listed entity, it could just lead to monetization of the Payments Bank business. Other than this, there will not be any much value addition from this merger. But for Paytm, this could lead to access to a large user base of Bharti Airtel. However, we'll have to see what kind of overlap there could be in this. And if Sunil Mittal is actually buying stake in Paytm, it could lead to a smoother exit to the large investors like Ant Financial, which owns more than 25% stake. Then there is Self Partners, which owns more than 15% stake, and SoftBank, which owns close to 13% stake in Paytm. However, analysts still believe that this deal is highly speculative, and there's not much value addition for Paytm to buy Airtel's Payment Bank business. And also, Sunil Mittal will be less likely to buy stake in Paytm, given the fact that he also needs to deploy cash in Airtel's rights issue call as well going ahead.
Okay. Bharti Airtel 757. Now let me put things in context here, and I'll get Sandeep Sabharwal to comment on it, because Bharti is one of his top holdings. This is completely unconfirmed. The source-based story. We don't know whether the investment in Paytm will go from Bharti's balance sheet, or it will be Mr. Mittal's family office. B, the relevance of Paytm Bank of Airtel Bank is not very large, because they don't have a very large touch base, so to speak, or a subscriber base or a customer base. Customer base, I think, is the right word. B. C, the good thing here is that we also know that Alibaba and SoftBank, they've been reducing their stake in Paytm, and if a family office in a sense decides to pick up part of that stake or back that stake in Paytm, the supply overhang in the short term gets distributed, it gets diluted. That has been the problem for a lot of these fintech companies, that the anchor investor locking, and especially some of the Chinese companies who've invested into some of these stocks, they are now selling, and they are selling regardless of the underlying price or the market conditions. Sandeep Sabharwal, analyze the news for us.
Analyzing is very simple, that when Paytm itself has declined that any such discussion is on, so there's no use discussing this entire thing. I think whenever some large stake sale has to happen in some of these new generation companies, all these kind of rumors start floating around which have no basis. So the unfortunate part for retail investors is that in most of these companies, the promoter holding is so small, and many of these foreign funds or companies or outfits of these companies who bought stakes in these new generation companies themselves are facing a lot of issues, and they are looking to sell out. And to that extent, there is a constant supply of equity, so that keeps the lid on the stock performance.
Right. Kunal, we've seen this recovery play out in the new age tech companies. Wondering whether it's going to last or not.
Well, I think it's lasting so far, Aisha, because so there is a change of behavior which happens first for the stocks. Now, when market gets into a phase of weakness, these are the first set of stocks which ideally would have probably seen a lot of weakness. But what you're seeing right now in the last 1 month at least is a specific change. For example, the likes of Paytm, Nykaa, Fino Payment Banks, Policy Bazaar, etc. These are the stocks which are actually seeing a good pickup of price action. Volumes are backing this move. These stocks have stopped, going into sharp phases of correction on the back of higher volumes. So, for example, Paytm, when the stock rose up from 500 to I think 720, 740 levels, the volumes were extremely sharp. I think on an average there was some 5 or 6 crores of a daily average volume for the stock. And when the stock corrected from 720 to 600, the volumes was just I think 5-10 lakhs on a daily average. So that itself tells you that on the way down, the participation levels for the stock on the correction is not as high as compared to on the way up, which means the interest in the skew is more towards the upside. That's a dramatic change, and these are kind of trends which indicates that the behavior for the stocks have changed, and you could probably see the trends lasting upside more rather than on the downside more.
Sandeep, what's the take on Bajaj Auto's reports that they're expected to cut production by about 25%? They're saying that there could be 3 to 4 months of potentially soft demand in the key international markets. Is it a huge worry?
Yeah, it is, especially for Bajaj Auto. Say, as it is, the domestic two-wheeler market has been going through a phase of going through a tough time because of subdued rural income, inflationary pressures, etc. So I think as it is, the two-wheeler demand has been suppressed. For Bajaj Auto, a big driver of earnings always has been exports, because their profitability on the export side is always higher. Now, one of its key markets is facing issues. This was known that the issues were there, but I think now it's come to a phase where sales are virtually going to a standstill in Nigeria, and that will impact the performance of Bajaj Auto at least for the next 2 quarters. So definitely a negative. So they will. So it's not two-wheeler stocks are not very owned stocks except for TVS Motors, where valuations are also high. I think we'll see some sell-off, but uh, might not be very huge. But any trigger for an upside is absent right now.
38, 34 for Bajaj Auto. Now, interestingly, we are not talking about it, but Sandeep, just like we had demonetization in 2016, Nigerian government has announced, I think, demonetization a couple of days ago. And Nigeria happens to be one of the strong market in terms of exports. So maybe they're feeling the heat of what is happening in Nigeria.
Yeah, that's true. So that's the main reason why, because that's their biggest market. The demand as it is was slow out there because of various issues, and now it will come to a total standstill for a few months.
I'm going to shift and go back to the consumer tech and the fintech stocks. Not because we've got an interview of Zomato, not because we've discussed Paytm. Interestingly, that this is one space where the recovery from the recent lows, whether it's Paytm, whether it is Policy Bazaar, and Policy Bazaar, by the way, Kunal, has been like a A rocket stock. Do you track this one on the charts?
Yeah, I did. In fact, over the last 1.5 or 2 months, when the stock had hit that 500 first, that was the first time, I think pre-budget or just post-budget.
Went, I think, below 400.
Yeah, it went below 400, but then it was a very swift, steep rally for Policybazaar.
Paytm up 17% this year. Zomato has done nothing. But Policybazaar is the one which, in a sense, has been the standout gainer per se. 576 rupees for PB Fintech. Manoj, in a sleepy market, Policybazaar last week has managed to hit out of the park. Do you track this one on the charts?
Well, not really, because as you're saying, the broader market and even the bigger boys in the Nifty 50 are into a trend. So I don't really track this at the moment. But then I heard the discussion about Bajaj Auto. So at least even the last trading session, we have not really seen much positional activity on the derivative side. Rather, if I have to pick any stock from the Nifty 50, especially if you go to the metal sector, because that is one which has actually seen good beating. So Tata Steel, I guess, at 110 and 111 is a good level. Yesterday, almost the last trading session, almost 32% extra delivery in cash-based buying is what we have seen. So we expect the stock might not really breach the 108 level, which can be a support, and the resistance would be somewhere close to 113, 104. So almost a 4% range is what we're expecting at the stock.
Okay. That's the new tech stocks and companies where how the stack currently is on. So Sandeep, what is the trade for the month of March? Is it about accumulating the stock which you always wanted to buy and you will get a chance to buy them in the month of March? Or it's going to be in prolonged winter? I mean, this time the seasonality of winter is missing, but for the market, the winter continues, right? Delhi garam hai, Bombay garam hai, so that winter is over, but for market, the winter continues.
Yeah, so I think as valuation, unfortunately in the stock market, as valuations become cheaper, people get more and more scared. So they become more and more skeptical. So, and as prices rise, they become more confident that we should buy now. So I think actually it should be the inverse. So I would say your first comment where whatever stocks you like, if they are available cheaper, you should be buying more of them is the way to go. I think there's excessive talk about Fed terminal rate, interest rates, etc. at a time when actually monetary policy, which operates with a lag, is actually starting to act. And we'll see that inflation over the next few months will start falling significantly as the base also comes into play. So I think this is a phase of 4 to 6 weeks, which I think give opportunity to investors to actually buy rather than get more scared.
Right. Okay. Let's get some more stock strategies. And given the bit of buoyancy that actually came by within the healthcare space and select pharma names as well in the week gone by, here's Devin Choksi telling us why he continues to like Cipla and Sun Pharma.
In case of Cipla and Sun Pharma in particular, I find that the portfolio of products that they have, they are relatively, I think, more stable. Probably, despite of all these inspections, and I think hopefully they come around with, I think, the clarity on these inspections. I would rather like to believe that I think product portfolio remains absolutely strong proposition, and there exactly the margins are also, I think, relatively stronger compared to many other generic players because they are basically into the complex generic specialty generic products. So from that perspective, I like both these companies from investment and would like to believe that yes, I think they would have probably the ability to answer those US FDA inspection queries, and probably I think they will turn around. So yes, currently the stock price has corrected. Maybe I think the fall continues due to negative sentiments. Maybe one can add the stock into the portfolio in subsequent fall.
right, let's revisit some interesting movers on Friday's trading session within the broader markets. You had a Mahindra CIE which shot up double digits, a 15% gain is where the stock wrapped up. Something like an IBREL as well was a buzz, and along with that you had the likes of a Dixon Tech, GAIL, GNFC as well as Sanofi India and even Whirlpool which spiked up about 4%. Manoj, let's get in a view on the charts, Mahindra CIE as well as IBREL.
Unfortunately, I don't really track into this, so we'll be more concerned into or looking more into the delivery-based buying and as well as the derivative concept. So, if there is a stock, I guess I'd like to discuss this on the cement as a sector. Now, for obvious reason, except ACC and Ambuja, we are seeing a good functional long arbitrage which is happening into a stock like Dalmia Bharat, and I believe this stock can be an alpha for this month of March. So positional, we have seen almost 38-40 odd percent of additional hedging which is happening in the stock. So we believe there is cash positioning happening. The stock has a potential of almost 1960 to 1980. So it becomes a buy at almost 1870 to 1880. The stop loss should be 1840 on the stock.
Okay, fair enough. Let's get in a view then from you, Kunal. Tracking those charts of Mahindra CIE, IBREL, are you seeing more potential upside?
So Mahindra CIE, yes, I think the entire auto anch space has done exceptionally well. In fact, this is one space which has moved much stronger than the traditional auto stocks, at least in the last 2-3 months. So most of these auto anch names, Atul Auto, etc., these stocks have gone through a bigger breakout. So price volume breakout again coming for Mahindra CIE looks attractive even at current levels. But then I would probably wait out for that phase of pause or a slight consolidation to dip into the stock price. Indiabulls Real Estate, I would still be a bit iffy into initiating a trade. The stock is trading at multi-month, multi-year lows, if I'm not wrong, or it was just a couple of days back. There seems to be more of a relief rally for Indiabulls Real Estate. But the only concern with these kind of stocks is that when the market gets into a strong trending mode, there are buyers or the trend lasts for these names. But when the market gets into a corrective / consolidation phase, these rallies, they don't last significantly. So I would probably be not initiating any buy in Indiabulls Real Estate, but Mahindra CIE, yes, on phases of pause or consolidation, I think it's a good buy.
Okay, those are a couple of stock ideas which are coming your way. NCLT is, by the way, going to be hearing the HDFC Bank merger case today. So that's something that we're going to be closely tracking after the hearing on Z which came by on Friday. Let's in fact bring up the intraday graph of Z and tell you how it's currently panning out, considering they did get that interim relief in the case with IndusInd Bank, 1.5% lower, but you did see a sharp crackdown coming in on Z to start off trade, finally settling around that 195 odd mark. Sandeep, firstly, let's talk about Z because, like we were chatting earlier as well, that this has become more of a trading stock now.
Yeah, Z is a trading stock because fundamentally long term, the issues which surround the broadcasting sector are, especially on the general entertainment side, are dwindling ad revenue share as ad revenue gets split into more digital formats, and a stagnating subscription fare which could actually start falling going forward, while the cost of content will not come down. So I think it's a double whammy on both sides. So obviously, if stocks get sold out a lot, they provide trading opportunities which can come at any time. But long term, directionally, I think it becomes more and more of a value trap.
Kunal, do you also believe so? That kind of avoid Z right now till all these hearings are going on?
Yeah, so there are two things. One is that these kind of news flows and sharp reactions, they generally form a bottom in place for stocks. We've seen that happening for Z. So, same on the upside, when there was a lot of positive news flow for Z, when the stock was at 350, 370 odd levels, almost a year or year and a half odd back, that was the time that a top was made for the stock and it then started to get into a corrective phase. So it's very much possible that the stock may get into a bottom formation process on the back of the news flow, the strong volumes, as well as extreme, if I can use that word, price action for Z Entertainment. But then for the prices to move up higher, you would need strong participation in terms of open interest, or at least a covering of existing short positions. Now, even if you look at the data for the last 4-5 days of the futures contract for Z, in the last 4 days, I think for the first 4 days of the previous week, there was a strong addition of open interest, almost 1.5 to 2 crores of open interest which was added for the stock almost on a consistent basis. And then on Friday, when you saw the stock getting into a recovery phase, the reduction was just mild. I think 75 or 80 lakhs as a reduction in terms of open interest. So the size of increase or reduction of open interest has to be as large as the size of increase in the open interest. And till the time that doesn't happen, you might not see the recoveries being stronger as well as sustainable. So you have to play it more as a very short term and intraday trading play. But as I said earlier, that possibly at that 180-90 mark where the stock tested a couple of days back, a formidable low could be at place.
Right. Sandeep, what explains the underperformance in especially PSU banks in the week gone by? And would you say that it was maybe more of a fad and the best may be behind us?
So PSU banks, long-term directionally, I still maintain that they are going to lose market share both in terms of the deposits as well as lending franchise. And to that extent, they are not franchises anyone would like to play for the long term. Now, in the short term, because of lower rates, treasury profits, as well as improved balance sheets, we saw performance from extremely depressed levels. Now, these, in my view, are unlikely to sustain. So, obviously, if the overall market bounces back, they'll also bounce back. But I think that big correction from extremely depressed levels is through. And going forward, given that yields have moved up, deposit rates are moving up, they will see a much sharper contraction in their net interest margins than the large private sector banks.
Let's look at the bank nifty for this year. And when we started this year, it was all about avoid IT buy banks, avoid IT buy banks. That was like the only mantra on the street, so to speak. And most of the funds had positioned their funds with that kind of in positioning. What do we have? We have a 7% decline on the bank nifty this year. And by the way, this includes mild outperformance from HDFC Bank. So if I look at PSU banks per se, they've got a real hammering, so to speak, of almost double digit across the board, even a stock like SBI. IT index during the same time has gone up 6%. Not that IT companies have come out with blowout set of numbers. TCS, they've disappointed. Wipro has been an howler. HCL Tech, they came out and slashed their outlook ahead of the earnings season. Midcap IT, Coforge, with the exception of, I think, Persistent, none of the mid-cap IT companies also came out with good set of numbers. But markets are markets. I guess the churn in the market is very, very evident in terms of where the market position seems to be moving. If you look at 2022, that means from last year end versus now, the IT index has outperformed. Let's look at the 1 year chart now. And I'm going to go to Sandeep and maybe Kunal and Manoj to discuss this. IT versus bank or bank versus IT. In this year, it's the IT index which has come back. But in last 1 year, the IT index is down 10% and the bank nifty is up by about 10%. So 1 year move, IT is down. This year, it's pretty much the reverse. So Kunal, it's changing. What happens now? Will IT go down, banks come up?
So I would not say IT will go down immediately because many large cap names have backed this up move for IT names. I think it's led by TCS as well as HCL Tech. So the only concern for the markets in last 4-5 months, what has changed is that there was a phase where banks that started to trend. Then there was a phase where the banks became extremely overbought, and then there was a phase where the large caps did not participate at all. And I'm talking of the likes of ICICI, HDFC Bank, and it was just the mid caps and small caps. So that phase of frenzy had also happened for the banking names, specifically for the PSU banking stocks. So after such kind of a phase, it's bound to be that these stocks may get into a correction/consolidation. Now, the only turn which I would probably wait out for is that whether large cap names like HDFC Bank and ICICI Bank, whether these stocks make a comeback for themselves sooner or later. Even I would probably add SBI to that list. So these stocks are as of now going to still a phase of consolidation as well as mild correction as compared to the PSU banking stocks on the mid cap front, which have been going through almost I think a 35 to 40% correction from their 2021 end 22 end highs. Compare that with the large cap IT names. Right now you're seeing a cohesive move. So initially it started off with few large cap IT stocks. Now the mid cap IT stocks are also looking very attractive. So the move has not yet matured for these IT names. So I believe that this divergence would play out for some more time, where the IT stocks may tend to outperform the banking names. But whenever the large cap banking stocks, they start to get into a rally phase, that's the best time to try and shift as well as do that sector change.
Okay, some other stocks that will be in the spotlight on the back of brokerage notes. You've got JP Morgan's latest report on Tata Motors. They've maintained a neutral rating with a 428 rupee target price, saying that JLR retail has outperformed as expected, and they are valuing the India business at about 337 rupees per share. Prestige Estates as well. CLSA has got a buy rating with a 566 target price, saying that they're planning an aggressive expansion, which is going to be a positive for the company, and they think that the valuation discount to the peers is a bit unwarranted. Let's get in your thoughts then, Sandeep, as to what the outlook is within the entire real estate space, and where do you see potential?
Real estate is the most sensitive sector to interest rates, and valuation of real estate companies historically have followed rate cycles. So I would think that we could still see a few more months of underperformance. Long term, directionally, real estate is in a good cycle now, but I would still think that as news flow trickles in of a possible slowdown in sales, etc., some more downsides are possible in most of the real estate companies. But at that point of time, they could present opportunities.
Okay. Where's DLF? DLF has had a big successful launch, and they've had a big successful launch where they launched a project of 1,000 plus condos, 1,000 plus flats. They were sold within 48 to 72 hours of the launch, and that is something which just tells you that at least if not in Mumbai, or if not in Bangalore or Hyderabad, at least in Gurgaon, things are really looking up as far as the demand-supply beam balance is concerned. DLF, by the way, is down 7% in this year. This is despite the fact that in that part of India, which is the Gurgaon region, the real estate prices in last 2.5 years, they are almost up anywhere between 25 to about 50%. That is something which is worth mentioning once again. I want to look at the metal index, because if inflation fear is coming back, then metals should look up. China demand seems to be coming back, but it's been a yes and a no kind of a year for the metal index. And Sandeep, if inflation is coming back, if China is opening up, the metal index should be the first one which should be racing ahead, because if inflation is there, that means commodity prices will remain high.
Yeah, so all the metal stocks ran up in the anticipation of higher Chinese demand, but unfortunately, what most of the people did not factor in was that the Chinese supply will also increase, and the supply increase possibly could be faster than what the demand revival in China is going to be. See, Chinese economy is now stuck in a secular decline phase. So obviously, from lockdown stage, it will see a revival, but then directionally, it's going to slow down even going forward even further. So I think there's no big play per se in commodities. There'll be specific commodities, obviously, which will have shortages, etc., which one can play. But more metal, steel, etc., I think they could be in a long phase of sideways kind of move.
Right, okay, time to get in some mid-cap strategies as well going. Kunal, what's on your list?
So I'll go with Paytm as a buy. The stock getting to a recovery phase back on Friday. And I think the best part is that the 61.8% retracement that has got completed for Paytm. So from 500, when the stock had rallied up to 720 plus levels, towards the phase of this correction, the stock has completed exactly that Fibonacci retracement zone and bounced off from those marks. So that's one of the reasons why I would initiate a buy. 588 is a stop loss and targets potentially at 700 plus.
Right. Manoj, what about your ideas?
I'd like to mention something on the broader prospect as well. Like I just heard that Nikhil was mentioning this. IT, I guess, from the October-November series, we have seen that positional weightage going up in the derivative side as well, which contributes to your market-wide open interest. Now, Bank Nifty and Nifty, there is a correlation. It's almost at 2.28. Now, the simple risk that you have is almost of one standard deviation on that. So that simply says 2.24 to 2.23 is where we might not really see this underperformance. So that would come somewhere close to 39,000 to 39,300. So we are expecting a good 5,700 odd points And we believe that post that the bank nifty would start outperforming, and that weightage that we have in the index of almost 33-34% would start paying out, and then we might see for a quarter basis at least that giving you an alpha. So as of now, yes, HDFC Bank, as I mentioned, that would be a short at somewhere close to a 1620 with a stop loss of 1635, and they expect 1580 as a target.
Get a move on then. And what's the khabar on D Street? Well, today we're focusing on SBI. They're in the spotlight as they recently held their roadshows in the US and the UK. What were some of the key issues that were discussed? Let's take it across to my colleague Pankaj, who joins in with all that khabar. Pankaj.
Well, SBI top management did some roadshows as far as US and UK investors are concerned. It was organized by Jefferies. Now, the interesting thing is that earlier, whenever they were having any meeting, the key issue or the key talking points were, largely on the lines of what is happening to NIMs, what is happening to growth, what are the new initiatives that the company is taking. And now, suddenly, you are seeing that key questions have suddenly changed to what is the exposure on Adani and when is the bank looking to do fundraising. So these are the two talking points as far as these meetings are concerned. So there has been a change as far as questioning or the narrative of a large bank like SBI is concerned. Now, they have been talking about Adani. They have given a press release earlier. They continue to maintain that. In terms of funding, they do say that their CET is now about 10.5, 10.6%. They're not in a great hurry as far as fundraising is concerned. But yes, as the growth pick up, they would need to do fundraising. Talking about NIMs, they have said that liabilities have been starting to reprice. Overall, positive commentary coming in, but investor questions regarding, a bank like SBI, which was related to growth, NIMs, how are the liability side going in, has suddenly changed to what's happening with Adani, and when is the bank looking for the next leg of fundraising.
Let's also tell you what else is happening outside the world of markets. And Nokia on Sunday announced its plans to revamp its brand identity for the first time in almost 6 decades, including a new logo as part of its push for aggressive growth in the telecom equipment industry. In fact, the updated logo features new distinct shapes and range of colors as well. Also, UK Prime Minister Rishi Sunak and European Commission President will announce a new Brexit deal for Northern Ireland. The deal seeks to resolve tensions because of the 2020 post-Brexit arrangements governing Britain and its open border with Ireland. Also, Saudi Arabia has announced a $400 million humanitarian aid for Ukraine as the country's foreign minister met Ukraine Zelensky. The visit was the first by an official Saudi delegation to Ukraine since the establishment of diplomatic relations between the two countries back in 1993.
Meantime, Prime Minister Modi will be inaugurating the Shivamogga Airport in Karnataka and dedicate the redeveloped Belagavi railway station building to the nation. He will also be inaugurating and laying the foundation stone of multiple development projects in the state. Moving on, the Delhi Deputy Chief Minister Manish Sisodia, who was arrested by the CBI after 8 hours of questioning, will be produced before the special CBI court today. He was, remember, arrested in the now scrapped excise policy case. The Aam Aadmi Party has decided to take to the streets across the country against the arrest of Sisodia. And after nearly a month of high-octane campaigning, voting is underway for 118 constituencies, 59 in Nagaland and 59 in Meghalaya, which will be sealing the fate of nearly 550 candidates. The counting of votes for both the states along with Tripura will take place on the 2nd of March. And in Meghalaya, the BJP and the National People's Party are contesting solo this time. And the Australian women's team once again has lifted the T20 World Cup trophy, beating South Africa by 19 runs. Remember, this is the 6th time that the Australian women have bagged the championship trophy.
Well, counting down to the market open, and the pre-open rates are indicating a mildly soft start, much in line with the SGX Nifty as well this morning. But the big question, can Zomato now become a $100 billion company? The founder and CEO Dipinder Goyal definitely believes so. In a candid chat with Nikunj, this is exactly what he told him.
But let's talk about possibility. Like you said that you never expected that Zomato would become a 5,000 employee company and it in a sense will become listed. It was almost like a garage startup idea which got incubated on your work desk. Do you think there is a possibility that in 5, 6, 7, 8 years Zomato could be a $100 billion company?
I hope so, and I am actually surprised why you're saying this, because internally that's what we actually aspire for. Internally that's the goal, that by 2030-ish we should be about 100-ish billion, right? And I mean, the way we see the business growing and changing in terms of scale and profit, I think we can easily be $1 billion plus in profit in 7-8 years time. But who knows, like his fingers crossed again. So.
Yeah. But for the entire architecture to work, you also need a team. And a lot of yes and no has actually happened with the recent exits. Founders are exiting. 4 key team members after public, they've gone different ways. Why is that?
I think, so first of all, there is nothing wrong with people leaving the organization anyway, right? So I think, I mean, people come in for 5 years, 10 years. We have about 175 people who have spent more than 8 years. So we
All right, that's one interview you certainly can't afford to miss. But in the meantime, let's check in on what the index calls are this Monday morning from our chartists. For now, the pre-open rate's absolutely flat. Looks like it's a consensus call from Kunal and Kush Bora. They're saying that it's a whole recommendation on the index, as we're currently skirting around the 17,420 mark in the pre-open rates. And this is after the fact that last week as well, you saw the index come under a bit of pressure, falling about 2.7%. A view on the Nifty Bank index as well. Remember, PSU banks really had a hard week last week, and it's a whole rating coming in from both our technical chartists, and that's exactly what the market moodometer indicates. Hold on the Nifty Bank index.
Okay, Kunal. 20 push-ups. Challenge. 20 push-ups, 25 push-ups. I did 25 push-ups at Zomato.
Within a day.
How many takes though?
No, it was all, I mean, this was just one attempt.
Seamless. Yeah.
Come on, guys, say something
Avan
that I'm
can beat you
fit.
guys.
Say something that I'm fit. Say something.
Follow.
How about getting a compliment that, Nikunj, 40 plus, you're still fit?
Yeah,
Not bad.
Great.
I was searching for that from morning. I said, Aisha bolegi. Avan will say, okay, Nikunj, you are fit.
They didn't show all 25 back, but we'll wait for 9:30 when the whole interview plays out to see and count all the 25 in the form.
He stopped before me. He stopped before me.
He stopped before
One.
you.
The folks at Zomato, they kept on insisting that, look, I did not have the right form.
Yeah, you were doing wide push-ups. And
Exactly.
his was, yeah.
But the folks at TT now believe, which is what all of us believe, that he stopped before me. So depending on which team you are part of.
Team ET now.
Okay, now that's a fun interview, guys. That's a fun interview. I would urge our viewers to stay tuned and just to understand what's happening inside some of the consumer fintech and the real internet world, so to speak. It's a very different world, if I may use that vocabulary. 2 minutes to go, and let me tell you, nothing is happening in the markets. Nothing is happening in the markets. We went, Kunal, it's like, the more you're trading, the more you're losing.
Yeah.
So don't trade.
Yeah, stop. I mean, not to trade, but then you be very, very selective in terms of trading. So what happens is when trader starts to lose money, the propensity to trade more is actually higher because they would probably be in an urge to recover. But those are best times to actually stop trading and reduce it dramatically. Be very selective with your thought process as well as what kind of trades you are looking out for, and definitely not venture into the high beta and the high high, fast-moving kind of stocks in these kind of scenarios, it is always better to go with large cap and stable names.
I want to look at just some of the Nifty calls we have on the morning in terms of a buy, sell and a hold, just to establish what the consensus view is. We are just getting tossed here and there, here and there. For me, the budget low and the importance of that is now crucial. It's a hold on Nifty from Kunal. It's a hold on Nifty from Kush, which is important that it's not a sell. It's definitely not a buy, but it's a hold. Then on the bank Nifty also, I would imagine that the trade pretty much would be similar. It's a hold. Now hold may sound like boring and it's like, we are cut copying graphics from last week. No, it is important that we did see a little bit of turn on Thursday and Friday. And despite that, it's a hold according to our technical experts. 10-year paper now the 10-year yield now is at 7.44. Now that is the monitorable. Rupee is at 82.9. So it's a morning where you got a lot of macro headwinds, whether it is on the rupee front, whether it is on the currency front, or whether it is on the global inflationary, whether it is on the global inflation concerns also. So again, is it going back to the macro, which will decide the market template and the market direction in the short term? I think we're going there. And that is what the change is, and that is what I think markets are adjusting to. It's been over a year of war in war between Russia and Ukraine, and we still have no stalemate whatsoever. 36 points down for the Nifty, 36 points down for the bank Nifty. First rates any second now. It's a Monday morning. It's going to be a very dry open, and it is indeed a dry open. Even Steven in terms of market breadth. Bank Nifty not headed anywhere. Mid cap index down by about 0.25%. You got the small cap index, which again is just not going anywhere. So markets are just laboring here. They are just not showing you any signs of directional, and if at all, the bias is actually on the downside. Paytm and Bharti Airtel, yes, no, yes, no. Economic Times today is saying that look, there is no talk. But Paytm, believe it or not, is at 646 rupees. Policy Bazaar, in a sense, was the star and has been the star outperforming stock, but today it is correcting. The force of gravity, I think, now is kicked in for a stock like Policy Bazaar. Zomato, well, the interview in less than 15 minutes now, ahead of, there's no news, but 54.5 rupees for Zomato. And then you got Cipla, Britannia, Nestle, the typical consumer names which are making a comeback when the market picture, in a sense, is slightly uncertain.
Okay, a couple of other names. Interglobe Aviation, that's one in focus. Over 50 planes of the company and Go First have been grounded because of engine woes. That's what reports over the weekend seem to be indicating. And we've seen that there have been quite a bit of technical snags with most of these aircraft. Paytm and Bharti, of course, are the ones in focus, but still reports are unconfirmed because Paytm, news reports seem to be indicating, saying that they have no such discussions with Bharti. So let's see what really comes about from this story. That's Paytm, of course, holding up 3.5%, but let's see what Bharti also may be up to. Still unknown whether the talks, when they happen, whether they happen in the personal capacity or within the listed entity, Bharti Airtel. So it's pretty much a lot of, grey out there right now. IRB Infra, they've got a letter of award for a project worth a sizable 2,132 crore rupees. IRB Infra now holding up 2.25% up in the green right now. Dilip Buildcon as well bagged projects worth about 3,600 crore rupees. Talk about the infra boom. Most of these companies getting orders on a daily basis, literally. Then, of course, there is Dr. Reddy's as well, and wires seem to be indicating that Main Pharma has sold US retail generics business to Dr. Reddy's for about $90 million. So you're not really seeing much of a reaction come by. Adani Ports, they've crossed 300 MMT of cargo volumes in 329 days versus 354 days, which was clocked last year. Adani Ports has been one of the stocks which has seen a mild bit of recovery as opposed to the kind of volatility and weakness that you continue to see in the other Adani Group names. So that stock holding out marginally in the green as we speak right now. Tube Investments looking to raise 3,000 crore rupees by March 2024. They're looking at expanding their EV business. There's Pfizer as well, which has completed the sale of their Thane business for a valuation of 178 odd crore rupees. And then Lemon Tree, a small bit of news, but they've gotten into a license agreement for a 110-room property in Kasauli in Himachal Pradesh. So that's another stock which is in focus right now. Some of the active movers from Friday, and let's see whether the metals weakness continues or not. Remember, Friday turned out to be quite vicious for a Hindalco, for a Tata Steel, for a JSW Steel. Let's see whether there's any recovery in place in the entire metals pack. Still reeling under pressure as far as I can see on the screen. Energy, yes, has been one buoyant pocket of late. So ONGC, GAIL, etc. have been holding out quite okay. That was the case at least on Friday. Doesn't seem to be seeing any follow through right now. But for the index, we're well sub the 17,400 mark as well. We're down a good 0.5%. So not just a soft start, Kunal, but a weakish start right now.
Yeah, a weakish start. I think we've now gone below the 17,400 mark on the index, and Bank Nifty I think is now substantially below the 40,000 mark. So we'll have to wait out for a point where if there is any kind of an intraday recovery after the first hour of maybe some adjustments of portfolios. The one sector which looks very attractive on the charts is the gas stocks, and from there I think ONGC is something which I would pick up as an initial trade. The stock is already ex-dividend, I think 4+ rupees over the last 2 days. So I think looks attractive at 154 odd mark on the spot levels.
Mark Matthew joins us now. Let's take a conversation forward and understand